All right, so on June 20th, 1980, the Rolling Stones released Emotional Rescue. Believe it or not, it only got to number 3 in the U.S. It began with the line, you remember, is there nothing I can say, nothing I can do to change your mind? I think that's a perfect song for today's session, right? So we go from OBBB high last week to, oh boy, here we go again. Want to bring in my next guest who says we've got to brace for wild swings, although nothing like April. Joining me now, Belpointe chief strategist David Nelson. All right, David, by the way, did you ever cover this song when you were playing?
I probably did. I just don't remember. A lot I don't remember from those days.
Oh, I got you. Well, speaking of remember, we all remember April. And you're saying, okay, it's going to be choppy. And you've got some other reasons, right? Tariff developments and earnings. But you're saying not to the degree that we dealt with in April.
No, there's going to be a lot of noise. I think we understand that. But I think what investors understand also is if they think back to April, they very quickly, investors figured out that tariffs were not going to be as draconian as they thought. We're seeing some pretty big numbers right now, but I think we all understand this is the art of the negotiation, the art of the deal. This is going to play out over days, weeks, probably months.
And even as an investor, whatever they are, ultimately is what they are, right? I mean, whatever, markets adapt. One thing I learned a long time ago is not necessarily always even the news, it's the uncertainty about the news.
I think what we're going to end up with is about 10 to 15% in tariffs. That's going to be split between the consumer and the company. The companies are going to be willing to eat, some of it in the margins because they want to maintain market share.
I've always said if companies were able to pass it on, retail stocks would never go down. Honestly, if you could pass on all your costs to the customer, why would your stock ever go down? The fact that these stocks get hammered show that they do have to eat some of this. By the way, there's other ways of being eaten as well. But let's talk about ideas, because you've got what I'm calling conservative ideas. One name I've been spying too, like Capital One and Boeing. I've been spying Boeing for a long time. I used to have this rule. I have 4 stocks, David, never sell. Boeing was one of them for a long time because it only had one competitor in a world where everyone was, buying jets. But is the coast clear?
No, not quite yet, but this is an opportunity right now. This is a trade. This is a very good trade because it has a geopolitical dynamic. These negotiations that are going on, one of the easiest ways for a country to kind of throw an olive branch to Donald Trump is to start buying planes. They're $100 million to $200 million a clip. You can close your deficit or your surplus. And if you think about it, they probably need the planes in the first place.
Right.
Now, what Boeing has to do is they got to prove they can actually deliver on the delivery side.
Right.
They did 58 planes last month. They have to do it in a safe manner. They are not free cash flow positive yet, and that's the sticky point because they keep pushing that out. If they can do that, then this stock's off to the races.
Let's talk about this AI story because it is broadening out, right? It's not just broadening out with companies, but also in different areas, right? Even within tech, it's broadening out. I want to ask you about the Lam and KLAC because we've seen these smaller semiconductor names catch fire lately.
These are the picks and shovels of the semiconductor industry. These were the uber growth names of the internet age, and they traded reasonable valuations. The NVIDIAs of the world, the Credos of the world, none of these companies can even exist without the Lam Research, KLA, or AMAT, or some of the others.
Real quick, spec names are hot. The Journal was, saying, hey, these speculative names are back. Watch out for the dump money, folks. You say when it comes to this kind of thing, you watch these names, but there's a big difference, right? From the dream to the reality. As they make that transition, that's when you like to leap on them. And a couple that are doing that right now, Snow and Symbotic.
They have to be profitable. And that's the difference here. Because when you're buying just into the dream and they're not profitable yet, you're really funding their R&D. You're really a venture capitalist. That's not what I do. When they go profitable like Snowflake, this one's on my watch list right now that just had a massive move, broke a downtrend line that goes back a couple of years. We know robotics are going to be with us here for the future, so this could be a very hot name.
Good stuff. Really appreciate it, my man.
Thanks for having me.
And you got the right color tie on today. All right. Hey.